A Home Business Tax Guide. Chapter 1. A Home Business Tax Guide. Home Business Taxes 1. The basic way you pay income taxes in a home business is the same as with any other business. Chances are you're a sole proprietorship, so you pay the business taxes through your personal tax return done on Form 1040. If you work a job and have a part-time business at home, you still fill out Form 1040 using your income from both sources. In order to file for a home office deduction, you must fill out Form 8829, Expenses for Business Use of Your Home. In addition, get the following booklets. IRS.gov 800-829-3676 Tax Guide for Small Business, number 334. Travel, Entertainment, Gift, and Car Expenses, number 463. Record Keeping for a Small Business, number 583. Business Use of Your Home, number 587. The two most basic rules to take deductions for a home office are: the regular and exclusive rule, which you must meet in order to take the deduction. A part of your home must be used regularly and exclusively for business. It can't be used sporadically or mixed in with the rec room. It's used for business only and used a lot. The principal place of business. In addition to the regular and exclusive requirement, your home business or office must meet at least one of the following three requirements. The office must be your principal place of business as defined by the IRS, which says it must be the most important, consequential, or influential location. The office must be used regularly for business. The office must be the sole fixed location from where you operate most of your administrative and managerial activities for the business. Tax deductions, which were once one of the beauties of engaging in a home business, are not what they used to be. To be eligible for business-related deductions today, you must use that part of your home claimed exclusively and regularly as either the principal location of your business or the place reserved to meet patients, clients, or customers. If you use your den or a spare bedroom as the principal place of business, working there from 8 o'clock to 5 o'clock every day, but permit your children to watch TV in that room during the evening hours, the IRS dictates that you cannot claim a deduction for that room as your office or place of business. There are, however, a couple of exceptions to the exclusive use rule. One is the storage of inventory in your home where your home is the location of your trade or business. According to the IRS, such storage space must be used on a regular basis and be a separately identifiable space. Another exception applies to daycare services that are provided for children, the elderly, or physically or mentally handicapped. This exception applies only if the owner of the facility complies with the state laws for licensing. Tax deductions for a home office or home business are somewhat convoluted. Generally, the concept behind it is that any space that you use to conduct your business plus all the expenses and maintenance it takes to keep that space operational are valid tax deductions, but there are specific rules you must follow. This is the standard way to do it for all types of businesses except for the C corporation, which home office tax deduction rules do not apply to. A C corporation owner who works out of his or her home can deduct their home office expenses in one of two ways. Take a personal tax deduction as an employee business expense. Itemize these deductions on Schedule A of the Form 1040. Lease the home office to the corporation. Receive rental income from the corporation which you report as income on your personal tax return. To be eligible for business deductions, your business must be an activity undertaken with the intent of making a profit. It's presumed you meet this requirement if your business makes a profit in any 2 years of a 5-year period. Once you are this far along, you can deduct business expenses such as supplies, subscriptions to professional journals, and an allowance for the business use of your car or truck. You can also claim deductions for home-related business expenses such as utilities and in some cases even a new paint job for your home. The IRS is going to treat the part of your home you use for business as though it were a separate piece of property. This means that you will have to keep good records and take care not to mix business and personal matters. No specific method of record keeping is required, but your records must clearly justify any deductions you claim. You can begin by calculating what percentage of the house is used for business, either by number of rooms or by area in square footage. Thus, if you use one of 5 rooms for your business, the business portion is 20%. If you run your business out of a room that's 10 by 12 feet and the total area of your home is 1,200 square feet, the business space factor is 10%. An extra computation is required if your business is a home daycare center. This is one of the exempted activities in which the exclusive use rule doesn't apply. Check with your tax preparer and the IRS for an exact determination. If you're a renter, you can deduct the part of your rent which is attributable to the business share of your house or apartment. Homeowners can take a deduction based on the depreciation of the business portion of their house. There is a limit to the amount you can deduct. This is the amount equal to the gross income generated by the business, minus those home expenses you could deduct even if you weren't operating a business from your home. As an example, real estate taxes and mortgage interest are deductible regardless of any business activity in your home, so you must subtract from your business gross income the percentage that's allocable to the business portion of your home. You thus arrive at the maximum amount for home-related business deductions. If you are self-employed, you claim your business deductions on Schedule C, profit or loss, for business or profession. The IRS emphasizes that claiming business at-home deductions does not automatically trigger an audit of your tax return. Even so, it is always wise to keep meticulous records within the proper guidelines and of course keep detailed records if you claim business-related expenses when you are working out of your home. You should discuss this aspect of your operation with your tax preparer or a person qualified in the field of small business tax requirements. If your business earnings aren't subject to withholding tax and your estimated federal taxes are $100 or more, you will probably be filing a Declaration of Estimated Tax, Form 1040-ES. To complete this form, you will have to estimate your income for the coming year and also make a computation of the income tax and self-employment tax you will owe. The self-employment taxes pay for Social Security coverage. If you have a salaried job covered by Social Security, the self-employment tax applies only to the amount of your home business income that, when added to your salary, reaches the current ceiling. When you file your Form 1040-ES, which is due April 15, you must make the first of 4 equal installment payments on your estimated tax bill. A good way to trim your taxes is by setting up a KIA plan or an individual retirement account. With either of these, you can shelter some of your home business income from taxes by investing it for your retirement. One disadvantage of being self-employed is not having health and disability insurance. You may also need liability insurance. Your homeowner's insurance covers your belongings in your home, but it may not cover all business inventory and equipment. Check with your insurance agent to make sure you have the right coverage. If you're selling something, you may need a vendor's license and be required to collect state sales taxes on your transactions. The sales tax requirement would result in the need for careful record keeping. Generally, the deductions you can take as a home business owner on your federal IRS taxes are as follows: a percentage of rent on the home or a percentage of depreciation if you own the home. A percentage of all home expenses used in the business such as electricity, water, telephone, internet, garbage pickup, property taxes, mortgage interest and insurance, and even minor repairs. Major repairs go under depreciation. The percentage is either the percentage of square footage of your house used for business or can be calculated by using the number of rooms used in the business as the percentage of rooms in the entire house. Home business insurance. Office machines. Furniture. Equipment. Cleaning and decorating expenses. You cannot deduct the first telephone line into your home as a tax deduction no matter what. You can deduct special business equipment, long-distance business calls and a second line, but not the first line. You can deduct the costs of using your vehicle for business, either the actual expenses or a flat rate of X number of cents per mile with the rate changing every year or so. In the end, taking the home office deduction will not increase your chances for an audit, but if your income is low and deductions high, it's a red flag to a suspicious IRS that you're trying to cheat them. Home business taxes too. The IRS looks on home offices and home businesses as big red flags because they know that many people will try to claim personal expenses as the costs of doing business, which is why they have complicated rules about home business tax deductions. You can deduct part of your housing expenses if they meet one of three important criteria set down by the IRS to determine whether your home office is a real business expense or just a cover for a tax dodge. 1. Your home office should be a place where clients, customers, and business associates meet on a regular basis. 2. You should be using your home office to conduct business only, nothing else. Don't even use it as a laundry room. The IRS asks specifically if the home office is the principal place of business, which means that if you're spending less than half of your working hours there, you probably can't take the deductions. 3. If your home office is located in a separate building, even if you work fewer than 3 days at home, it will be easier to take the deductions on that separate building and the equipment in it than if it was located in the house because it's clearly separate from the house. This is why garages make good home offices. You can even take deductions on the costs to make it into a home office all the way down to insulation. These 3 guidelines are subject to interpretation and not laid in stone. If you're in doubt, contact your accountant, lawyer, or the IRS directly. Get IRS Publication Number 587, Business Use of Your Home. If you decide to take a deduction for a home business, you have to fill out IRS Form 8829, which is an automatic red flag to the IRS gang. A lot of people don't take the deduction even though they're entitled to it because they want to avoid getting caught on the radar for an audit. Generally, if you work at home and conduct your full-time small business there, the IRS will let it go, but if you work a job for someone else and keep a part-time home business which constantly registers losses, that's the real red flag. You will have to verify your write-offs with meticulous records and prove that you actively pursued new customers for your sideline business. If you have expenses that are partly business and partly personal, as with many parts of a home business, you must separate the personal part from the business part and keep records to support your deductions. For your home business, you can deduct a percentage of your total personal household expenses, rent, utilities, insurance, water, and taxes, equal to the amount of space that your business takes up in your home. The Taxpayer Relief Act of 1997 has given home business owners some tax advantages. If you base your business but often leave the home to do your business, as with a plumber, you can claim home office deductions as long as the home office is regularly used to perform your administrative functions, as long as there is no other fixed location where these functions are done. Refer to IRS Publication Number 587, Business Use of Your Home. irs.gov/prod/tax_edu/teletax. Home office taxes. For home office businesses, you can deduct property taxes, mortgage interest, utilities, repairs, and a percentage of the depreciation. To take the deduction, the office must meet at least one of the following requirements. 1. Your home office is the primary office for your business and you do not have another office in the same city or area. You can't claim a deduction if you're a realtor or professional with another office or if you have office space elsewhere. Teachers cannot claim office space. 2. You see clients or patients regularly in your home. 3. You take care of children in your home. 4. You conduct business for your multilevel marketing business. 5. You have a home office which is the primary office used on behalf of your employer. 6. You rent out a room or several rooms to tenants. Furthermore, the office must be used regularly and must have other uses like storage or recreation. You can deduct expenses like utilities and mortgage on the home office space either by dividing the number of rooms in the house or the square footage of the house by the amount used for the home office space. Get IRS Booklet 334. Tax Guide for Small Business for the exact formula. Even if you work for someone, you can deduct a home office if it's used for work.